Simmons Bank.
So she is one of the top producers, lending producers out here in the DFW area. She services a lot of um, my clients. She services a lot of my parents' clients that have been in business for over 25 years. Talk to us a little bit about your programs that you have going on right now.
Okay, so I just moved to Simmons Bank, by the way,
Hmm.
and a lot of people are asking me why did I move. So we have an awesome product, and with the rates going up, with the market of the homes going up,
Hmm.
people weren't feeling comfortable anymore with their payment, their monthly payment. So I found this bank, Simmons Bank, and we have a CRA program. What that means is it's a 100% financing loan.
Okay.
And so when I say 100% financing, that means it's 0% down, right?
That's insane.
So I do want to make this clear though. So when I say 100% financing, 0% down, there's always closing costs.
Okay.
Okay,
Okay.
so I want your audience to have this in mind that there's still going to be closing costs. And
Mm.
it's the normal. I mean, I'm going to say about $8,000 in closing costs.
Okay.
Our fees, just the bank fees, are $9.95. There is no 1% origination like other banks
Hmm.
have it
Hmm.
as. And then there's the appraisal fee, the attorney fees, the recording fees,
Hmm.
the escrow account, the insurance, the normal things.
Yeah.
And this also includes the title fee or the title insurance
Okay.
because as you may already know, sellers don't want to pay anything, right?
Yeah.
They don't even want to pay the title insurance nowadays, where before it was part of it, now it's not.
Yeah.
And so to make offers attractive, we have the buyer pay the title insurance. So this $8,000 that I'm talking to you about that they would have to bring in, it includes that already.
Oh wow.
So it just saves so much because normally the programs that are out there, the traditional ones, FHA is 3.5% down payment.
Hmm. Hmm.
And then we have the conventional, which is 3 or 5% down payment. So with it being 0% down payment, you have a chance to maybe add the paying the gap from the appraisal
Hmm.
value
Hmm.
to the to the sales
Oh, got
price,
you. Yeah.
and you can use that for that if you do have the funds.
Yeah.
um, Maybe increase whatever you qualify for.
Yeah.
Well, if you have that amount
Yeah.
to increase it, so it is awesome.
Okay.
Another awesome
Let me
piece.
ask you this real
Yes.
quick. On that one, what credit do you need to have, more or less? Like where does your credit need to fall?
Okay, so 620
620.
is a credit score.
Okay.
However, sometimes if we have one credit card, let's say one credit card, and you have a 700 credit score.
Hmm.
So this program does require for you to have two trade lines, two active trade lines. So it could be credit cards, auto loan,
Hmm.
furniture store, even the care,
Okay.
the credit card,
Okay.
anything. But you have to have two with 12 months history.
Is it like a alternative line of credit? Is that what you mean? Like, can it be like a Metro PCS phone bill?
So this program is okay with that.
Okay.
So this is the options. Either on your credit report, you have two credit cards, for
Yeah.
example,
Yeah. Yeah.
for 12 months. That's fine. That's all we need. Let's say you don't have two credit cards, you only have one credit card, but in the past, in the last 3 years, you've had two credit cards. They're not closed, but you've had them and you had them for 12 months and you paid on
Okay.
time and
Okay.
everything. We can use that. So we can use an active plus two closed ones. Okay. Or let's say you don't have anything now because you decided you were going to just close them all.
Yeah.
You don't want them anymore. You can have two closed ones in the last 36 months,
Mm.
but now we need a verification of rent. Okay.
Okay.
So if you have two closed ones, a verification of rent. So if you rent from an apartment building, for example, we will send them as a verification of rent form. They complete it. We do expect that there is no lates on those.
Okay.
And that would be your, per se, third line, right?
Hmm. Hmm.
But let's say they don't have anything. They don't have any of these options that I mentioned to you. We can go non-traditional. So non-traditional, we would need a verification of rent. That's
Okay.
that's not an option. It's mandatory. You have to have a verification of rent. Then we have to have a verification of utility. And for that, all the borrower has to do is call their utility company and say, hey, can you send me a letter where it indicates that I've always paid on time,
Hmm.
for example. So the creditor will send them a letter, and that's all we need. And the third one can be a utility or anything else. Car insurance, cell phone,
I
Metro
like that. There we
PCS,
go. There we go.
anything. So we do need a total of 3 letters if they don't fit the
Those
other
criterias.
criteria.
Wow.
Yes.
Wow. 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 So literally just what they have to come through with closing costs, they can get 100% financing and
Yes.
at that 620 credit
Yes.
score.
Yes.
Oh my gosh. That opens up a lot of opportunities for a lot of these first-time home buyers at the end of the day that are struggling,
Yes.
you know?
And when you mentioned the word struggling, see what happened before the rates went up,
Hmm.
people were qualified for a certain amount. And we had given them their monthly payment. And they were comfortable, right?
They can do it. They can manage
They
it.
can manage it.
Yeah.
Okay. But then rates won't go up. Their payment goes up.
Yep.
Now either they qualify, but the
It's
payment
frivolous.
is too much,
Uh-huh.
right? They're like, yeah, I qualify, but I don't want this monthly payment, Diana, right? Or now they don't qualify at all
Yeah.
because they exceeded their debt to income ratio guideline. So what happens now with this program is that there is no mortgage insurance. So if you calculate mortgage insurance, if you have an estimate that you've done in the past and you see there, you're going to see mortgage insurance. At any time that you don't put 20% down on a program or on a loan,
Yeah.
you have mortgage insurance. And it runs anywhere from 150 to 250. So what happens with this program, and these programs come only from banks. Okay, I want to be very specific on that because
Small banks.
Yeah. Because they have portfolio loans. This is called a portfolio loan. So we don't sell this to Fannie Mae, Freddie Mac, or FHA.
It's in-house.
It's in-house.
Yeah.
So they don't charge mortgage insurance.
Okay.
Well, that saves you 150 to 250. Depends on what.
Yeah.
Normally that's what it is. Now on a conventional loan, when you have paid 20% down, or you've reached 20% equity, it's removed. On an FHA loan, however, it's never removed.
Mhm.
If you have the loan for 30, whatever years you have it for, if you keep it for 30 years, you're going to pay mortgage insurance for 30 years.
Gotcha.
Now, is it a bad program? No, because it's a program that is out there and I've used it for many years. But this one is unique. So only small banks will have this program, and the interest rates and maybe the guidelines will change just a little bit here and
Okay,
there.
okay.
Maybe the counties, for example, because we only serve 8 counties here in the Metroplex, so it's not every county around. So they vary just slightly, but they don't have mortgage insurance.
Okay. Okay. And what are those 8 counties that you're
Okay, so it's Dallas. I have to go like this because
that's how you know it?
yes, I do. So it's Dallas, Denton, Collin, and
Okay.
Kaufman. And then on the Fort Worth side is Tarrant, Johnson,
Okay.
Parker, and Palo Pinto,
Okay.
which are right next to.
That's a good area.
That
That's
is a
that's
good
a great
area.
Okay.
And so the CRA, it's CRA stands for Community Reinvestment
There
Act.
we go.
And what we are required to do as a bank is we have to serve our community. And this is a way of doing it, 100% financing, so it could be so that it's affordable to them to obtain a home. So this home is either for first-time home buyers. So if you're a first-time home buyer, you automatically qualify. But if you're not a first-time home buyer, the day that you sign, that day you cannot own a home. So let's say you owned a home yesterday and you sold it today, that's okay.
Okay.
So you wanted to sell your home and get all the equity that you had in your home and put it all in this program if you wanted to.
Wow.
Bring your payment down, you can do that.
Okay. Okay.
So it's not having a home. Now, sometimes they live in a mobile home park, but they don't own the lot. They own the mobile home, but that's not real property. That's personal property, right?
Yeah.
Or if they have a lot, maybe they thought about buying, they wanted a lot to build and it just didn't work out.
Yeah.
A bare lot is okay. They can own a bare lot.
So what if let's say for instance, I have a father and a son, and the son's trying to qualify. He wants to get a house. The dad already has a house in his name, right?
Right.
For instance, and let's say it's already been paid off, his house, the
Right.
father's house. Could we put them on the loan together?
Unfortunately, not on this particular loan. Now, there's other loans, right?
Right.
The traditional conventional or the traditional FHA that allows non-occupant co-signers. On this one, if we do want 100% financing with this particular CRA program, not for this one.
Not that scenario. So even if it was the son who was the primary occupying person, we couldn't do it?
No.
Okay.
Not if we're going to add the son. But what I suggest for those that need a co-signer, because a lot of times we need a co-signer, right? Or a co-borrower. Find somebody, maybe a sibling that doesn't own a home. Find somebody that doesn't have a home first, Because in regards to the scores or the trade lines that we were
Yeah.
talking about, it's 2 trade lines per application. So that means if you and I are applying, for example, you can have 1 and
Okay.
I can have 1.
There we go.
You can have 0 and I can have 2.
Okay.
So if you have, a sibling that hasn't established your credit yet, but
But it's
you have,
working.
it's gonna work.
Yeah.
But it's working
Yeah.
for 2 years, right?
Okay.
It's gonna work because I have the credit.
Okay.
So try to find a co-borrower that working and doesn't own a home so that you can benefit from the
Perfect.
CRA product.
Perfect. How many clients have you gotten through with that process already since you've made the move?
So I moved 3 weeks ago,
Okay.
and I haven't closed 1 yet, but I have like 7 in my pipeline already.
Wow. Okay.
So
So people are actively looking for that.
yes,
There we go.
yes.
That's good.
And remember, the prices went up, and when they saw this lower rate, now they qualify for a little bit more, or maybe they don't qualify for more, but now their payment is reasonable to
Mhm.
them.
So they can manage it. Yeah.
Exactly.
There we go. I love that.
Yes.
That's going to open up a world of possibilities when it comes to
Yes.
a lot of my clients.
So I would like to tell your audience, if they applied for a mortgage in January per se, or before January, and now they didn't qualify, or they the rates went up, and and now they had to do a whole lease for their apartment, maybe a year, 6 months, whatever they did. I would tell them, call us, let's find your amount, and if you find that house, because you're going to find a house, it's going to
It's
come,
gonna happen.
it's going to happen. But don't close the door now just because you did a whole year lease.
Mhm. Keep that option open.
Exactly.
Yeah, that's good. I mean, I think that honestly, at the end of the day, you have to be able to take advantage of the opportunities that come your way.
Exactly.
So that's a really good option. I'm glad you came through
Yes.
with that.
Yes. Yes.
That's
I'm
awesome.
excited with the program. And then I don't know if you work a lot with those that have an I-10. Oh, by the way, the CRA, it's called 100% Advantage loan.
Okay.
That loan, they will help with the DACA, those that have DACA, employment cards, any type of
Okay.
employment.
Perfect.
As long as they have it's active or it's not expired,
Mm-hmm.
their working permit or employment card is not expired, we can use the 100% finance.
Okay. Okay.
Now, if we add an I-10 person to it, then it becomes an I-10 loan.
Right. Right.
So anytime any of the borrowers does not have a valid social security number or employment card, then it becomes an I-10 loan.
Okay. So what's available for the I-10 clients?
So I-10, we have financing, and it's 10.01% down payment.
Okay.
So
Okay.
we
Okay.
finance 89.99.
Wow.
Okay, so almost 90%. So 10% down. I'm good. I don't like to say 10.01, but so it's almost 90% financing, 10% down. Now, if those that have cash at home, you can deposit that.
Mhm.
Okay, that doesn't work for traditional loans. Okay, but for the CRA or the 100 or the I-10, you can deposit your cash, and all we would need from you, because you do have to put 10% down. So we're talking a house at 250. That's 25,000.
Yeah, that's a lot.
Right? Plus $8,000.
Yeah.
In closing costs, now we're talking 32,000. So a lot of people don't have that at the bank, and they leave it at home because it's, safer for them, or they have it handy. They can deposit it. They can deposit that, and all we would need is a budget letter saying how did I was able to save. Let's say you have $10,000 at home. How was I able to save $10,000 at home? And we'll help with the budget letter.
Okay.
And you don't have to wait, because with the traditional loan, you have to wait either 1 month or 2 months before we can actually send your application in, right? And a lot of times, so you're wasting that time that could be, useful for looking for homes, and we can't provide you with the pre-approval letter because you have a large deposit that you can't source. So when it's cash, you can't source it.
Yeah.
If it's paychecks and things like that, when it's easy to source because it's right there, right? But with this program, you don't have to wait.
That's really interesting.
And if you have a gift from parents or siblings, you can use that in additional.
Put it as a gift letter.
With a gift letter.
There you go. Yeah.
Yes.
Okay.
So you just tell us your scenario, and then we'll tell you how we can make it work.
Okay.
Because it's all about options, giving you more chances of how we can make it work. We're not here to tell you no on your loan. We're here to want to help you.
And even then, like, even if for instance, you're not ready or you have credit issues, or we work through that. At
Yes.
the end of the day, we work through that. We try to get you to a point where, let's say, for instance, your income wasn't there. We try to find, other solutions like another co-borrower,
Yes.
just to get you to the point where you're more secure and you're at a better place to be able to buy at the
Exactly.
end of the day.
Exactly.
Yeah.
And if you have too much debt, then we tell you what to pay off.
There we
If you
go.
have a car loan and it's too high, then we tell you how much you need that car
Exactly.
loan to be.
So
that
it
you
works and it fits within your debt to
Exactly.
income ratio. That's a really, really
Exactly.
big thing.
Exactly.
So that's why it's really good to come through and see us, see Diana, have a consultation with us, and see how we can help you and help, fit your needs. And at the end of the day, how we can get you to that point where you're at a better spot when it comes to purchasing a home.
Yes. And one thing I really want to make this known, because it's new to me. So, because I haven't used it in the past, but now that this program allows it, it's Experian Boost. Have you heard of that?
What's going on with that?
So Experian Boost is something that Experian has. So the credit bureaus is Experian, TransUnion, and Equifax, right? Well, Experian has this membership where you log in, you give them access to your bank statement information, so just as transaction histories, and from there they're able to see what payments you have made consistently for months. So for example, let's say they see TXU in there, for example. Oh, well, that's a utility company. Let's report that. And they find how many TXU payments you've done in the last 12 months.
Okay.
And they report that for you. And it's on your credit report, it's going to show as self-reporting TXU, for example. If you pay your rent, for example, and it'll say whatever lease company or management company, and they see it for 12 months there, or whatever months they see it for, they're going to put it in your credit report.
Wow.
And we can use that. So for those two trait lines that you need for the 100% advantage financing, or the I-10, because I-10 does require also a 620 credit score with two trait lines. Unfortunately, we can't use non-traditional. But we can use Experian Boost. So if you're able to sign up for Experian Boost, put in your whatever you pay, your information in there, and it's gonna gather the 12 months that you've paid services on. And they'll put it on your credit report.
How much is that?
I'm not sure how much the cost is.
We need to find out.
But it's worth, I think, for those that cannot do this loan. If the answer from me is, oh, you don't have, the two trade lines, then this is the answer. Yes, it's going to take maybe a month, to get it going, but a month is nothing.
In the grand scheme of things, when you can at least try to qualify.
Exactly.
There we go.
And for that interest rate, because you can't get that interest rate anywhere. Another thing for refinancing. So those that bought a home in the last 2-3 months, their rates were, I don't know, 6.5, 7. Because right now on a conventional, if we look up the T-Shack assistance, it's 7% on a conventional loan for 3% assistance.
Wow.
Okay, so if you close like that, wait 6 months, because for a refinance you do have to wait 6 months and call us, because you may be able to qualify for the 5.5 and no mortgage insurance.
That's what I'm talking about.
So they're going to save so much money. And you know what? Sometimes, you don't qualify for this program. I would say to them, if you don't qualify for this awesome program, still buy your home, because guess what? Prices are going up. Okay?
Yeah.
Prices are going up. They're not going to go down. Buy now. And in 6 months or a year, whatever it takes you to bring your score to 620 or to have two trade lines, whatever the requirement, that's the requirement for 12 months, the most it's going to be is 12 months. Because in 12 months, you're going to have a mortgage payment on your credit report. And you're going to open that credit card because you really need it, right? So you're going to open the credit card. And in 12 months, refinance. No mortgage insurance. How much money that's going to save you?
A lot. A lot.
So do it now. Don't wait. Prices are going up. In 2008, the prices were so low, and I thought, maybe they're going to go down. Well, no, they kept going up. 2015 up, 16 up, 22 way up.
The pandemic barely slowed things down.
Yes.
Just exacerbated a lot of things.
Yes.
So,
exactly. But now we're back.
Yeah.
I remember these days in 2019, the rates were similar to what they are today.
Yeah.
And the only difference is that the houses went up. But if you wait more, guess what? It's going to go up.
Yeah. Awesome. Well, thank you so much, Diana. I
You're
appreciate
welcome. Thank you for inviting me. And first time I do this in English.
it. It was
But
good.
it was exciting.
It was
I'm
good.
excited. So
Thank you.
call us.
World of information, honestly, world of information. Dana, where can we reach you? What's your phone number that we can reach you at? Or
So you can reach me. I'm going to give you my cell phone number because if I don't answer for whatever reason, I'm on the phone with a customer. You can text me also 469-658-1235.
awesome, awesome. And again, my phone number is 214-469-6651. You can reach me on Instagram and Facebook under Roy Lopez Realtor. You can find me there. Awesome.
Thank you.